Cardano have recently come out with many announcements, including stablecoins to be launched very soon, privacy-focused blockchains as side chains to Cardano, and many other upgrades as well. So we're going to go over those in this video, and also a competitive analysis of Cardano, where it stands right now versus the competition, because we're at the very bottom of a bear market right now. Cardano is still in the top 10, and there are many other competitors who are, trying to take business away from Cardano. So where does Cardano stack up right now? We'll go through all of that in this video, and I'll leave timestamps for all of that down in the description. We can look then at the economic activity going on Cardano right now. Now, like I said, we're in the bottom of a bear market, and so everything's down across all chains, but we can still compare and see how different chains are actually performing during the bear market. When it comes to ADA, Minswap is by far and away the leading application. You can see here TVL is 27 million. It's an exchange, and so what's better to look at is actually exchange volumes, which I will look at during that section. But it's absolutely miles ahead of Wing Riders and Sunday Swap. So the community has spoken there. And then you're looking at Indigo protocol here, which is CDP, which I believe is collateralized debt positions, or otherwise known as collateralized debt obligations. I'll go through that in that section, but this is a synthetics protocol where essentially traders can put up some ADA as collateral. Let's say you have $1,000 of ADA there, and you can use that as collateral to take positions in other assets. For example, like a pegged version of Bitcoin or the US dollar, but it uses ADA as collateral. This kind of thing is very complex and risky, in my opinion. I wouldn't really recommend normal people to use this kind of thing, but it is part of the ecosystem, and Ethereum has its own version called Synthetics protocol as well. So that's just part of what crypto is. And then right down here, we're looking at really not much else, right? The amount of TVL and trading volume is very, very low. I want to look at ADA as well, which is a lending protocol. You can see the TVL right here is $200,000, which is absolutely paltry. And so, not great. You really want to be seeing a lot more volume and TVL on a lending application. Where does that stand versus the competition though, right? So right here you can see this is Binance Smart Chain, a very different beast to Cardano, a lot more centralized, people would say, but looking at the TVL and the volumes right here, they're actually gaining ground. PancakeSwap has got $3 billion worth of TVL on here. It's also got the most users and the most trading volume of any DEX, including Uniswap, although Uniswap does much higher trade size per trade. And then you have Venus, which is the lending protocol here, kind of a copy of Aave with $1 billion almost of TVL. And, a decent ecosystem, which over the last month is, actually gaining ground right here. So we will leave out the comparisons of the actual layer 1 blockchain in terms of decentralization and everything like that for now. But you can see that Binance Smart Chain, there's a reason why they're above Cardano, and that's because they have a lot more value. Now, looking at some competitors right here, around Cardano, like Polygon. Again, Polygon can be sort of thought of as kind of Ethereum, another version of Ethereum. Yes, you have a proof of stake chain that most of this is on right now, but they will be upgrading that to a ZK, which is a layer 2 on Ethereum. Again, it just has a lot of advantages of being able to use the biggest applications like Curve Finance, Aave, Uniswap, right? So it is plugging into that TVL. So I would see this really as just a kind of offshoot valuation of the Ethereum ecosystem of networks. If we go to kind of another competitor, which is actually very different out of the EVM side, something like Solana, which has obviously had a very bad time of it here. You're seeing Radium DEX with a little bit more, but then some other applications like Solend, which is it's actually still bigger than AADA, which is on Cardano. So for right now, these smaller chains are having a very tough time of it, and you can see a lot of the EVM style networks like Arbitrum, Optimism, Polygon, which are all these scaling solutions for Ethereum, really sucking up a lot of the change and actually growing during this time. One of the things that I think might help with trading volumes on Cardano is a stable coin, which is coming. USDA is going to be fiat backed. So Emergo and IOG have set up this new company, I guess, which is called Ansons, where anyone can actually go and open an account with Ansons. You can link up your own bank account. Now this can be used for institutions as well, right? So they can put, $1 million of USD in their bank account, switch it over to Anson's, they issue that $1 million directly on the Cardano blockchain, and that's backed 1-for-1 by $1 in a bank account. Think of USDT and USDC and BUSD in that regard as well. So this is Cardano's version on the Cardano blockchain, 1-for-1 backed. This is what I would recommend most people to use if they were going to use a stablecoin on Cardano, mostly because it's 1-for-1 backed and it's set up with the Cardano Foundation and Emergo as well. JED is crypto backed, and so I just don't believe that normal investors need to take any risk with using a product that is crypto backed. It's just not necessary for most people. Maybe some institutions might have some use for JED, just like they have use for DAI as well. But for most normal investors, I would suggest this is a much better choice. Now, what that means is that an application like Minswap, which is really important for Cardano, will have more trading pairs and be able to trade against USD as well as ADA. Some people are fine trading ADA for another token, but that is just not what the market wants. You look at every single exchange and the market wants to trade crypto assets versus dollars. And so this may actually really help Minswap to actually up their game and up the trading volumes. Now, for right now, you can see that the average trading volume for Minswap is, let's call it 50 million to 70 million ADA per month. So let's say 70 million ADA, that would be around $21 million of trading volume per month. So it's not massive, right? And there's a lot of room for growth right here. How much to actually Minswap make out of this? You can see that liquidity providers take 0.3% of the trading fees. The trading fees are 0.6. So you could suggest that Minswap as a protocol maybe is accruing about half of those trading fees. So if we times that by 0.003, you're looking at Minswap as a protocol potentially earning around $60,000 a month. You're looking at maybe $750,000 to $1 million in trading volume that's accruing to the protocol and potentially to that token as well. So it's still miles away from Uniswap, PancakeSwap, and some of the other bigger dexes that are happening over at the EVM side. Now, we saw very low TVL on ADA Finance, which is a lending protocol on Cardano. The reason for this is because of the way that the lending and borrow markets work. As you can see here, you have to agree to a fixed term and interest for loans and borrows on this protocol. This is very different to the way that every other protocol works. For example, Aave or Compound, where an investor just puts any amount of assets into a pool, and then the supply and demand of the pool dictates the interest rate that a borrower will pay. This is very different with fixed terms and interest rates, which obviously has a much smaller market. Most people don't want to be tying up their assets. They want to be able to recall them or whatever. So as you can see here, the activity on this app is basically close to zero, which is obviously very worrying for a bear market as well, because if no money is being made from the protocol, how do the team pay themselves and everything like that? So really what we want to be seeing is a lending market which is much more fluid, much more like Aave. Liquid finance is doing that, which we'll get onto in a second. Something new from Cardano, though, is Lace Wallet, which is a new wallet from IOG themselves. We'll go through that now. As you can see, they are developing a lot on Cardano. We are the third largest chain, as you can see here, by active developers. This is through GitHub, so the data may be a little bit off in terms of what's really happening, but you've got Ethereum, Cosmos, and Cardano right up here as the top three. Kusama and Polkadot definitely up there as well. So one of the developments has been Lace Wallet. So it's another wallet for Cardano. There are many other community wallets as well, like Nami and Flint Wallet, which I think are really good. Lace is another one. So you can plug in your existing wallet, you can load it up. If you have a ledger, you just link it up really easily. And then you can look at everything. I think it's probably a little bit of an upgrade from Yoroi, which a lot of people use. You can see your NFTs here if you have any, all of your transactions, and then staking as well. You can easily choose some stake pools and see all of the details here. One good thing as well on Cardano, if we just go through with a sample transaction here, you can actually link up a ADA handle. So if you have an ADA handle for your wallet, or if your friends have an ADA handle, you can just @ them and actually just send them via the ADA handle, which I think is really good use case for those handles instead of the long address. And then another good thing about Cardano is that because it's a UTXO blockchain, you can actually send multiple assets to multiple different people just in one transaction. So what we can do here, for example, is spend 50 ADA and then 50 COTI, and you can keep adding assets over and over again. And then you can actually add a bundle here as well, which is where you send to different recipients, but it's the same transaction. So you can do everything at once. So if you had like 10 people that you wanted to send ADA to at once, you can actually just do it all in one transaction, which I think is a very good use case. A really good tool to see what's happening in the Cardano ecosystem though is Taptools. I would recommend looking at this. This is a completely free site. You just connect your wallet here and it gives you a portfolio of what you hold. So it's like a DeFi dashboard. I think it's really good in that regard. Now down here, we can see a lot of the tokens that are trading on Cardano right now. Now, as an investor, I just want to quickly go through my opinions here. I think the vast majority, if not all of these tokens, are wildly overvalued in comparison to the economic activity going on top of them. Liquid token is worth a billion ADA, which would be around $300 million right now. The app hasn't launched. Indigo protocol has a few $1 million worth of TVL and very small amount of activity. It's worth, $90 million as a fully diluted valuation. Wildly overvalued. Funnily enough, Minswap, which is the most used application, coming in at number 5, below Meld and Liquid, which haven't even launched their products yet. So these are just nowhere near valuations I would ever look at to actually be buying these. You need some sort of proof that the market actually has a use for them first. They have some activity going on. So Minswap down here at around 200 million ADA, which would be $60 million. Now they earn around $600,000 to $1 million per year. That could definitely go up. Still at a 60 to 100 times price to earnings ratio, still a big punt there. So that's how I look at these things, wildly overvalued, and they have a lot of token emissions to come. So not playing in any of the protocol tokens for right now. In any case, from bigger ecosystems like Binance Smart Chain, Ethereum, for the most part, the L1 token is the token or the coin that accrues the value and not the applications. You can play them very short term for some pops in activity, but it seems like over the long term, the L1 token is the thing that actually accrues the value, at least up until now. In terms of Indigo protocol right here, as you can see, what happens here is that this is basically a loan protocol and a collateralized debt obligations protocol. I wouldn't recommend anyone buy Indigo assets like IBTC or IUSD. So what happens here is that you have IBTC, which should track the price of Bitcoin. But what is actually underlying value, right? What is the value underlying that IBTC position? It's ADA. And so what you do is you have a trader that comes on here and puts $10,000 worth of ADA, and they open up a position in Bitcoin. Now, if you own that asset, the IBTC, you don't own Bitcoin. You own a synthetic asset, which is a collateralized debt obligation that hopefully tracks the price of Bitcoin. I think for most normal investors, you should steer clear of anything like this, not just Indigo, on other platforms as well. If you want exposure to Bitcoin, just go and buy it. But this type of thing, I think, is dangerous. There are, especially on small chains, you can have price discrepancies, you can have liquidity problems, and you can have bad debts. If we go over to the liquidations tab right here, you can see that there are many IUSD and IBTC positions that are dangerously close to being liquidated right here. Now, what should happen is that there's 111% collateralization ratio. So there's enough ADA to back this. When it gets down to a certain position, for example, 110 or 105%, then the protocol will start liquidating this. But bad debts can always happen with protocols like this. So definitely think twice if you're looking at synthetic assets like this. Now, coming to Liquid Finance, like I said, they haven't launched their application yet. According to the roadmap, Q4 2020 for a mainnet beta, that probably won't happen because it's 2 weeks away, and 2023 maybe for that, and actually a lending and borrow market. This is going to be a lot more like Aave, so pooled lending, so you can input and output assets at any time that you want, and you just have a interest rate based on supply and demand. But according to Taptools, a valuation of $1 billion ADA, which is, if true, that's the diluted valuation. It's just a crazy valuation for an app that hasn't launched yet, but this should hopefully be a little bit more successful than what ADA Finance is doing with NFT lending, which fixed terms is definitely a very niche market, even for crypto. Looking at Cardano in its entirety as a blockchain, we're actually seeing the real kind of fundamental demand of it right now, and we can actually compare that to other chains. So during a bear market, most of the transactions that happen off for a reason, right? There's much less speculation. People don't need to move their assets or speculate on NFTs or anything like that during a bear market. And so what we can see now is that, firstly, the amount of activity on Cardano compared to the previous bear market is ridiculously more. That's because during the previous bear markets, it didn't have smart contracts or anything. So it's definitely growing as a chain. That's number one. The second thing is we can compare the actual activity in payments versus what's happening in other chains. So payments, that's the thing we need to look at, because each transaction can have multiple payments. So payments is around 340, 350,000 per day. BNB chain currently doing around 3 million. Polygon currently doing around 3 million. Ethereum doing around 1 million transactions per day, but each of those payments is much higher value. And so transactions and payments is good to look at within context. You know, BNB chain has a lot of users and a lot of transactions, pretty much the most, but each transaction is much lower in value. It's much more retail focused. So you don't have to say that the blockchain that does the most payments per day is going to be the best or the most expensive in terms of the value. What we have to look at is how many payments are you doing, but what is the total value of each payment? Now, Bitcoin does the most value per payment of any blockchain. And so Cardano can actually fit in here in one way or another. Is it going towards the more retail side, and so more payments but lower value, or fewer payments and higher value? Cardano can pick what it's going to do, maybe with more decentralization and a slower outlook, and an outlook focused on security. Maybe Cardano will actually have fewer payments than other chains, but they may be higher value as it attracts, just larger institutions to come and use it. So we are a long way from Cardano being kind of mature or being able to compete in terms of transactions or users as other chains, but it's taking a different approach. I hope that was a pragmatic and unbiased view as to the real state of where Cardano is compared to the competition in the blockchain space right now. If you want a deposit and trading bonus on Binance, check that link in the description. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.
When I was sitting there with Ryan Selkis and we were at the panel, the fireside chat, he says, why does no one like you? He said, because we don't have Ponzonomics, and they do, and they need to dump their stuff, so we're the enemy. Cardano's gone through a lot. It's been a hard year. I think ADA is down 73%, but we're going to win. We really are, because we kept the faith, we kept the principles, and we're still here, December 10th, 2022. Some of the others are going to prison, but we're still here, still fighting, still strong, still feeling good. Still able to keep it real. Markets up, markets down, bulls and bears, Ponzi's about. We're still here.